Hi, I'm Nick Clements, co-founder of Magnify, and let's talk about personal loans. Personal loan, you borrow a fixed amount of money, you will have a fixed interest rate, a fixed monthly payment, and you know when you will have paid off the loan in its entirety. It's really that simple and straightforward. Personal loan is great for anyone who is looking to borrow cash. So it's not a purchase that you can make on plastic with a credit card. If you need cash, personal loans tend to have the best rates for cash needs. Secondly, if you're looking to refinance your existing high interest rate credit card debt, a personal loan can be a great option because the interest rates are usually much lower than credit card interest rates, and personal loan companies tend to approve people with much lower credit scores as well, so you have some great options. The only thing I would say is if you have an excellent credit score, so 700 or above, you should think about a balance transfer strategy, and at Magnify we have a lot of information on balance transfers. But then if you can't do a balance transfer, or you still have more debt that you need to reduce the interest rate on, a personal loan is a great option. So first of all, you need to make sure that there is no prepayment penalty. So make sure that if you want to pay off that loan early, you can. Secondly, some banks and some financial services companies will try to sell you extra insurance on top of the loan. Most of those are pretty bad deals. So be very, very careful, very skeptical of those add-on insurance policies that they put onto personal loans. And then finally, you're going to want to compare APR because most personal loans will charge you a fee and an interest rate. And the combination of those two will give you an APR. So when you're comparison shopping, and we list at MagnifyMoney.com the APR, but when you're comparison shopping, make sure you look at the APR, which includes the fee and the interest rate, and not just the underlying interest rate. Personal loans do have fees associated with them. Typically what happens is when you go out and you borrow money with a personal loan, let's imagine $100, there will be an upfront fee. It could be anywhere from 1 to 3 or 4%. So for that $100 that you borrow, if there's a 2% fee, then that means you will have a $2 fee that you have to pay up front. Now it's important when you apply for the loan to make sure you understand how that fee is paid for. Often, and typically at Lending Club and Prosper, they'll deduct that fee from the loan proceeds. So if you borrow $100 and there's a $2 fee, you'll end up being given $98 when you receive the loan. So make sure you pay attention to that.